OPEX, end of year 22, and the idea of a driving input. Hi friends, my name is Josh, and it's time for another weekly outlook of markets and profile from the team here at TRADEWITHPROFILE.com. This is the beginning of our work each week. We are a skill development firm focusing intraday futures traders looking to enhance their skill as it comes to the market and using profiling tools as the key analysis tool, a way to arrange the auction as they're looking for ideas in crude oil, NASDAQ, Russell, and S&P E-mini futures. And so this is the beginning of the work that we do each week, is to get kind of a large, high-level view of the world around us so that we have a good plan as we come into the week ahead. And there's quite a lot to cover in the week ahead. And so we typically always start that by just kind of having a macro review of kind of where we are in the space. And when we talk about a macro view, what we're really talking about is, what are the contextual things that are driving where we're at and what's going on? And it continues to be the dominating narrative being around inflation and what does the Fed do? There's a principle that we've long held as those within markets, and that is that you don't fight the Fed. And right now the Fed is against equity markets. Don't have a lot of time to go into that, but everyone's looking for signals about what the Fed will do, such that lots of the moves are based on what's happening in inflation reports. And just to get an idea of what that even looks like, if you've never gone through and mapped the ranges off of these economic reports, here we have kind of combinations of historical CPI and or FOMC releases through July. And you can see how we're just trading back and forth across these ranges. In fact, even how some of these ranges are the exact same. This was last week's CPI here in the blue, and then the prior week's FOMC before that. We had a CPI down here, CPI up here. So these are the driving inputs. Inflation gives us numbers, and then the Fed responds or doesn't respond and goes on from that. So what do we do from a approach to that in markets? Well, like in everything, we lean on the principle and foundational understanding that at its core, an auction is behavioral, meaning that the one fundamental we can lean on is behavior. And one of the reasons that we use the profile is it maps behavior. It tells us where people did business and where they didn't. What prices are they attracted to and what prices are they not? And so as we look here at the ES relative to the VIX curve, which is a measurement of the risk premium. So what are people expecting that's going to happen in the S&P 500, essentially? Right? That's what we measure in the VIX. And the VIX looks at a couple of different expirations. A typical VIX is 30 days out. There's a lot of participation happening in the nearer term, inside of 30 days. And what's driving that behaviorally is, if I buy protection for a portfolio for an event, like a CPI, I'm just buying enough protection to get me through that, make sure I don't have any adverse reaction, and then I can get out of it. And that's kind of what we've been seeing the last several months, is we've been seeing participants kind of hedging up to get through an event, and then once we're through the event, it's done and we're burning off. And we're seeing that now in what we're looking at here in the curve. Okay, so now we track two different ways to look at this curve. And when we talk about a VIX curve, we're just looking at the relationship of participants across a number of these expirations. And the reason that you look across a number of expirations is that participants will go into the cheapest risk premium first and then cascade out. If you've never traded agricultural products, we used to see this in agricultural products all the time when I was hedging and doing things like that for producers, is that, let's say, for example, that we have live cattle or corn that go limit in the near contract. Well, they're still trading in the forward contracts. And so once the first one's locked, they'll start going into and then cascade out until all of them lock limit, right? So people will pay the short-term premium first, and then if that gets too crowded or is too expensive, then they'll go into cascading ones. And so when we see all of those hedged up, that's when we see bottoms, because everybody who's bearish is bearish. And then how do markets rally? It's when everyone who's bearish is bearish. And then we go to the other side when everybody's complacent. So what do we see here as we're looking at these combined curves? Is that we see, now that we've gone through the FOMC and the CPI, we're seeing a very complacent curve. So we've definitely rallied. And as we look here, we're pushing higher. We're just going to draw here. We're pushing higher as these curves are getting very complacent. So we've got the mid curve here is about a negative 777. When it gets to about 10 to 13, that's uber complacent. We've got the near term is like negative 122. When that gets to negative 4, that's really uber complacent. And then the combined curve, this is looking at both of those together and the relationships. You can see that that's really starting to push now into this complacent zone. So what does that mean? It means be cautious of believing too much of this rally. This was a rally born off of, we got through some pretty concerning events, and now we're going to breathe. But really, what has that done? That's really just taken us back into prior ranges. It may have kicked us and kick-saved us through the end of the year. However, we still have some things to watch as we come into the end of the year. And specifically, we're going to look here at the number of days of trading left. And so this is related to the idea of, the end of the year 2022. If you've not mapped out and looked at what do we have left in 2022, here's kind of how these weeks go. So like this week, we've got OPEX at the end of the week. So we have options that will expire at the end of the week. Next week, we will, once those options are out of the way, we'll try to establish some new ranges. Then we have a shortened holiday week with Thanksgiving here in the United States. There is trade on Black Friday, very small avoid. Then we have the 27th through the 3rd. That's a full week that has GDP releases as far as non-farm payrolls. That's another binary event. The 4th through the 10th is a full week with no major releases. The 11th through the 17th is the next big event to look for. We have CPI, FOMC, and OPEX all in the same week. And really, that's like the last big week that we're looking for someone to make any kind of move, especially from an institutional side, before the end of the year. Because after that, you've got kind of 2 days of decent trade before you get into like Christmas. And then you have the Christmas week where you've got holiday Monday. And then the only people who are showing up for markets are vacationing retail schmoes. Guys who would love to trade real time, they are full time and they are home and they've got nothing else to do. And so they're going to try to trade and act like a professional, and it is the worst. Don't do that. So this is what's left in the space. And then as we are, looking ahead at this, how might that play out? We don't have any earnings reports. We just kind of got that. We could see us kind of push up into this area. Could still see that 4150 is kind of what I'm looking for. Would get us to kind of full complacency as we also get to the same time frame of those releases, and then start to take us back lower to close 2023. Okay, so that's kind of where we are, and that even leads to like what we're looking for next week with OPEX. Looking for just kind of a continued drift or sideways as we get in the week ahead. To that end, let's now talk about the calendar, just to kind of see what is on the calendar this week that we can lean on or pay any attention to. And we've got a couple things. So Monday. Not really any, Williams speaks, but that's after the close. Nothing really big there. Tuesday, we've got PPI in the morning before the open. So that's an inflation-related release. Watch that range. That's going to be insightful, I think, to how that session plays out. Wednesday, we've got some import-export stuff, some core retail. Again, pre-market. Number of releases before the market. We do have some business inventory that's going to be at B period. Just watch those. Sometimes you can get shook out until that plays. Nothing really going on throughout the session. Nothing really playing there. Thursday, we've got building permits, initial jobless claims, all pre-market. Then we do have a Fed speaker right after the open. And then Friday, you've got OPEX with home sales at B period. That's what we've got for this week. All right. So now let's go look at some specific products that we're going to look to express ideas in. We're going to start first by looking at the ES, the S&P 500 futures. And I always like to start at, kind of a weekly basis, or I'm sorry, monthly basis, and take a look at this. And actually what I want to do here is I want to go look at the long-term composites just to get a sense, kind of where are we? We're in Q4. We're towards the end of 2022. We're looking towards 2023. Where are the big references and what are we looking to do? Notice here. So this is the composite for 2022. This is the composite from the COVID ramp. There are a couple key prices along here. Notice where we are. We're kind of above this big node from last year. We have for this year pretty big node that we're right on. The next spot gets us up into that 41.75 area. So we could very easily play in here for the next couple of weeks as we get through the holiday and then lead into that big mega week, right? And then one of the things that I'll be looking for is like, where are we relative to this post that? If we're above that, that could actually set the stage for 2023, pushing us toward these highs again. However, if we're below this, that sets the stage for us to push lower, ultimately toward the 3,300, which has been a target for me for quite some time. And I think it's still actually there. But, you know, so far we've been having these lower highs. We still have not had a higher high yet. Okay. So, still accepting even on a quarterly basis, one time framing lower, that has not changed. So, you know, when is this on a macro level going to start changing? When we can get a higher high on a quarter. Okay. So that will be something to watch as we end the year and get into 2023. But that's not where we're at right now. We're talking about this week. So let's talk about this week and expectations and you know, where we are. You can see here is that big node that we got back to, and, you know, looking from a month basis. So here is September. We had a lower month. Now we have a higher high for a month. This was a big driving lower month that came off the year-to-date VWAP. And this still is kind of viewed as a responsive rally back up into those areas. So we're kind of coming back and testing some of these key ranges where we've had inflation reports. We've not been able to get back above those or those big FOMCs, but the big one is up here. We had Jackson Hole. We had a CPI up there that kind of said, hey, buyers can't get any higher. That's a great place to see that we could potentially test up here and then see, can we break out of that or can we push lower? For the week ahead, though, we're looking at 4,100 for the weekly expected high, and the weekly expected low is back down here. Now, note this is the 5-day point composite, and then we've got the 20-day here. So we have a new posture in the auction where the price is above the 5-day and the 20-day. So that means that we're likely to see some balancing and to pull value higher. So if you are like, oh man, I'm going to come in great guns blazing and I'm going to buy this thing on Monday, I would caution you against that. In fact, if we move higher first, that's likely going to fail back into this area just to try to pull value higher. As we go look at that on a weekly basis, okay, we get even more insight into this whole equation. And that is that you can see we closed the week above 2 standard deviations of weekly VWAP, monthly VWAP as well, and we left the last week's VPOC much, much lower. Okay, so we didn't have enough time to pull value higher in the week ahead. So while there is a supportive area and node here that we want to continue to balance around, be wary if we push early in the week for this to get snapped back down. Now, if we just push back in this direction, we have some supportive areas to then look for new highs. You know, we do this each week in and week out. What do we do first? Do we go higher first or lower first? And then what's happening in the profile? If the profile is thin like this and we go higher first, that's increasing the probability it's going to snap back later. If we can pull back into it, that's a form of like us going lower to pull value higher. And that lets us get back in this direction, balance, and build energy for the work ahead. Last week, we were looking for new weekly lows. And that was based off of the prior week had pushed, and we were saying, hey, we wanted early push higher and then failure to go down to 36.90. Now, that did not happen. What happened? This CPI. And this is what binary events do, gang. So, you know, binary event introduces new information in the market and it changes participants' perspective. And so we knew coming in that was something. That's why we look at these economic releases, these planned releases, to know, hey, all things being equal, the auction would have been rolling lower based on how it was behaving. It changed everyone's behavior when we came here. So we're going to respect that. That's fine. We now have kind of a window of strength. So unless we get back below this area, I don't think you really have to be concerned from a sell side. However, you got to be careful chasing this higher. Right. And when we even go look at the TPO chart here, what do we see? But we see lots of holes in this auction. What do I mean by holes? I mean, we've got single prints in here. We have a gap back here. We have some more single prints. We got naked point control, single prints. So we have a lot of holes in an auction. When auction moves very swiftly across an area and we don't trade back and forth across those prices, it's a pretty concerning thing. And it doesn't mean that we're going to clean it tomorrow. It just means that we're going to carry that forward and watch out. We can easily slice back through a lot of this stuff in short order. For me, when I come into Monday, I'm looking at, we have a poor high here, so definitely expecting new RTH highs for Monday. But note that the point of control is way back here. So if we open in range, we're going to look for an early pullback to test that before we get new RTH highs. If we open above range, which is potentially likely since the auction was shut off not by activity but by time, like we just got to the end of the week and that shut it off, then we'll look for, if we're here, if we fail, we'll look for movement back this way. One of the playbook trades that we have is a third period reversal. That is in play. Why? Because we've had now 1, 2, 3 periods higher. So we're primed to kind of reverse on this. So if we, gap higher, look for this 3670 or 3965 area to be tested. If we open kind of here, push higher and come back, that will be the play. And unless we accept below this, right around 39.51, there's nothing for we're not going to see any significant selling. Okay, so auction is doing a good job. Here's another view of that composite. You can see there's an area right in here we need to build some balance around, and that is likely the case. So let's clean up some of those images there, and just look at the trade plan. So new posture, expecting 51 points. Still looking at about 42 points in the first hour. Got 33 days left on this contract. Weekly expected high, 40.85. What are key levels that we're looking for? I think that year-to-date VWAP is calling. So 4,100, very easy. Not too much of a stretch above the weekly high. It's within the monthly expected high. So as long as we're holding where we are, that's a good spot to look higher. 38.75, the 90-day. Is a good supportive area to the auction to watch the auction hold. So if we push lower early in the week, watch that 38.75, pull value up, and then we rock and roll from there. Okay, so that's what we're looking for in the ES. And now let's go take a look at the NASDAQ, shall we? So NASDAQ also showing us quite a big turn of events here and pushing higher above last month's high, also being goosed by the CPI release. What's the first thing that jumps out to me? Jumps out to me is how thin this profile is. So very, very concerning structure in play. The weekly pivot, 11,040. So value way back down here. We pushed above that. We were also expecting new weekly lows in this direction. CPI took care of that. That took us to the top of a bracket that we're now accepting above and looking to push up, ultimately up here towards this 2022 developing VPOC at 12,129. So that's kind of my upward target that I'm looking for this week. That's within the weekly expected high. No problem there. But again, same concern is look how stretched we are above these deviations. I will not chase this. I'm going to either look for them to pull back first into this area to go, or if they stretch out and then come back in, and fail, I can join for short-term opportunistic shorts. And it's not a turn. I really need to eat through a lot of this, some of these 2-hour excess bars to really think that I'm doing some damage to it. But as it is right now, very likely we're going to have to do some balance early in the week, I would say, to pull value higher and sustain this move. Or if we push higher early in the week, get up to that year-to-date VPOC, watch for it could balance up there, and then if we go up there and push back, then we're looking in this area. Okay, but definitely have some animal spirits playing out, and just like with the ES, very, very punctuated in the structure. Single prints, untested VPOCs, naked VPOC, naked VPOC, naked VPOC, single prints. That's just all kinds of holes in the profile that just are a measure of the very impulsive activity. That new information came in the auction in the form of less inflation than expected, and we're off to the races. Also has a poor high, expecting higher prices on Monday. If we open in range, I think any early liquidation is an opportunity to get long for new RTH highs. If we open above, look for them to, if they hold the gap, they'll be pushing towards that 2022 VPOC. Failure comes back toward these decision levels. Unless we get below Friday's opening range, it's hard for the sellers to really get any traction as they're looking ahead. So we will continue to give them the upper hand. New posture, price above the 5-day equal to the 20-day, 216 points, 165 points in the first hour. That key reference that we're looking for this week is the 12,129, and really looking to hold above where do we want to hold above? I think really this area right in here. So, 11,444. The 90-day VPOC, we kind of want to hold in this area, or we fail back into this range and we start cleaning these things up. Everybody tracking? Everybody rocking and rolling? Okay, awesome. Let's talk Russell. Because the Russell gives us, I like the Russell. I have that in the mix because that gives me a different look. And has played out, fairly well in terms of what we were expecting there, is that we've now achieved the chief objective we had actually a couple weeks ago, was to get that year-to-date VWAP. Boom, we're there. And the Russell looks even, pretty good on a monthly basis. You can see here, we're actually at the top of a range and the opportunity to break up and test some of these lower highs, right? So as long as we hold up here, we can keep pressing ultimately up to that 2022 VPOC. I don't think we get all the way up there this week. What does the Russell need to hold? Well, look at the composite levels here. We need to hold here, or it's rotation back in this direction. Probably something to look at past the Whoa Nelly week, right? That's our homage to Pete Jackson. So if you ever watched football when you were a kid, in the 90s, you'll know what that means. We'll date ourselves. So impulsive structure, not quite as impulsive as the ES and the NASDAQ, but it's definitely there. Big reversal. You only get a bottom like this when you got a new binary release coming in. So, now mark that as key defense. If we trade back through that price at some point, I don't know, then, we need to run for the hills. Definitely don't want to see anything here. We could trade all the way back in here and not negate anything and rotate back higher. So, be careful chasing early in the week. Let them kind of set up, see if they can pull the 5-day higher so you got something to lean on as we push higher, because same story as we're looking at the TPOs. Look at all the holes, right? That's a very impulsive auction that's got a lot of emotion to it. Not necessarily one that I want to be real excited about. Had a rare stat day actually in the Russell on Friday that we did not take out the IB high or IB low, although we had a pretty wide IB. We'll be watching this 1885 either here, or we could press here. Since they did accomplish the key objective of that year-to-date VWAP, that could be a spot that we start pushing lower with the Russell. So we'll watch that. If we do, then we've got opportunities to go to a couple different decision levels to the downside to start the week. Again, think early pullbacks, opportunity to be long later, unless we really start to push deep into that. But as far as ranges, still looking at about 32 points per session, and 26 of that in the first hour. A lot of it in the first hour. Weekly expected high 1917. Weekly expected low 1856. By the way, these expected ranges are all on the quick sheet as well. You can download those attached to this video as a link. Make sure you have this in front of you just to kind of know, hey, where is everything from a posture standpoint across the asset classes? What are the expected ranges? Are we near monthly expected highs and so forth? Just to give you some additional ideas as we're out there looking at, but that's what we're looking for in the Russell. And then finally, let's talk about crude oil as the last key product that we look for ideas every day. We pick these products because, they really do give us, a number of different things to look at. And, one of the decisions that you can make as a trader is, how big is my playbook? Am I a one product trader that has, one playbook setup? Well, then you're going to be limited in the number of opportunities that you have. If you're a multiple playbook setup, You can reduce the number of products that you're looking for, or like a lot of guys that are trading stocks, they'll have like one setup, but there's 4,000 stocks to express that across, right? So they can have the same setup but look for a number of different ideas. Where are we at in crude? Well, we're in a balanced market. Okay, so this is a very much range-bound traded market, and we are spending a lot of time around that $88. What's the story? What's the plan this week? Well, after starting higher and pushing lower, we're back to the middle. So looking for us to push one side or the other this week from balance. However, notice from a monthly standpoint, we are developing value higher, although it's still an inside month. If we can take out this excess, we've got a nice clean path up to year-to-date VWAP and higher, and some prior high volume nodes around the $96 area, and then that could even push in this direction. But if we take out some of these lows, we can start rotating back toward 78. Not there yet, but that's what we're watching in the week ahead. Now, layering all of these multi-comp, all these VWAPs on here, right? It can get kind of messy, especially when they're all on top of each other. But what did we see last week? Okay, here's the prior week. Here's this last week. It's engulfing, which would be a bearish thing. You started high, took out the low. However, where did we end? Right back into the middle. We could really go either way from here, and that's kind of the plan and the expectations. We can go up here or down here just on Monday. Okay, so and that is likely to tell. If we get below 86.50, then we're going to go test these lows. If we get above 91.50, then we'll go test those highs. So we can kind of wait and let it develop. Looking at the TPO charts, which I am back to just looking at the RTH for the WTI, Western Texas Intermediate, as opposed to looking at both the Globex. I look at the Globex. This is the full Globex volume profile. This is the RTH TPO, so I can see the structure. But we're in the middle of a couple references, right? I got a negative VPOC down here, got a negative VPOC up here. We're at balance. So Monday, we're looking for a break and run, break and run. Could be either one. We'll see which one it is, and look for that inside out trade, as it were. As it pertains to ranges and expectations, expected range still could be pretty high. We're seeing pretty big ranges still. About $1.20 the first hour. We are still in the December contract with just about 8 days left before we roll from there. 89 is going to be the key pivot for the week when we were right there, right? So it's going to be from there out toward the edges, the expectation for crude oil. Okay, so that takes care of our kind of key products that we're looking to express ideas around. And the place that we like to go next is just to say, well, look, what other ideas are out there that are interesting? And we've been tracking these in Notion, just of current ideas and new ideas. And let's just start with some open ideas. The one that we talked about last week that I'm still in is a straddle and cat. We talked about putting that on Tuesday. That is in play and working. New ideas that we have active. One, Bitcoin. Now this has been on the radar for a while, but what we're really looking for is Bitcoin, which has been in a range. And we're looking for that capitulation flush. Well, this whole FTX mess is the capitulation flush, right? We're can continue. What are we looking for now? We're looking for us to get back above 19K, and that gets us back in a range. Because what happens is you have a market, okay, and you're range bound like this, and then you push below. Now the next behavior out of a balanced range is either a new move, or if you come back inside, it's a test. And if it's a test, then the probabilities will trade across that. Why? Because we just told everybody we can't go this way. So that we increase the probability we'll go this way. And then break the other side and go on towards 30K. So that's what we're looking for in Bitcoin. And so I'm going to have alerts at 19K, see if we get there. Okay, next one, Amazon. Amazon showed up looking for a strangle or iron condor. And so, what's the reasoning for that? Is that if I got a market like an Amazon who's been moving lower and then now has pushed higher to shut off the auction. So it's been in the move phase. Now I had a shut off. So what's the next behavior is balance. So that means I'm going to go sideways. And this is a great spot, especially because when we've been pushing lower, the implied volatility has gone higher. So now I can sell calls and puts and build a strangle. Or if I want to make this a iron condor, reduce The capital outlay reduces the premium collected, but I can do one call and one put. And now, as long as we stay in this range over the next 30 days, which is the expectation, and bounce around in here, then that trade will work. So we'll be looking to put that on Monday. Okay. So that is one idea. And then the last one that I have is lean hogs. Okay. And so this is built around the idea that you could see on this chart how lean hogs have been, in a range, tested above it, come back inside, tested above it, and now they're back inside this range. So as long as they hold in this area, where is the most likely destination? And that is a move back to the point of control down here, which is going to be the target, 65.37. So I'm going to watch this on Monday, maybe see if lean hogs can rally just a little bit and then start to fail, give us something to lean on and get in. But got a pretty juicy target, from where they are to where they're potentially going to go. So and by the way, $1 move in lean hogs on a one contract, that's $400 P&L, just to kind of give you an idea. And they just trade a very shortened session, so even shorter than grains. So if you never traded meats before, watch out. But that'll be an idea that we'll be kind of tracking. It could be kind of fun to see one of those in play. Okay. All right. So that's it for our ideas in focus. And so the last thing that we're going to talk about is a development focus for this week, because we are, after all, we're a skill development firm. We exist to help you build the skill so that you can be a competent market professional, so that you can achieve the outcomes that you're looking to do, whether that is just to drive your own investment portfolio and make better decisions around that and have some confidence in your skill, or have enough of a foundation that you can weed through all of the mess of all of the potential ideas and strategies and stuff that's out there, or to work in the industry as a professional. Whatever those are, we're here to help you think through what's a focus that I can work on each week to get better. Because in the idea of continuous improvement, there's always ways that we can get better. If we don't keep working on getting better, then we're going to die, right? It doesn't matter what industry it is. As soon as somebody stops improving, that's the beginning of the end. So what's our development focus this week? All right, we're going to talk about what's your driving input. Now, when I talk about driving input, I've been having these conversations with developing traders around their playbook. Okay, so a playbook is a set of conditions that you have enumerated that tell you this is where I'm going to be active, and I know why to be active here and why I have edge around that. We like to name our playbook setups. So I have an IB go with, or an IB go with variation, or an extension fade, or a structural cleanup trade, or a directional open go with, or a binary second move trade, or third period reversal, end of day trend fade, a whole bunch of these that all define certain times of day, auction criteria, relationships of price to value that I know and are codified, that I can express those and I can track them and I know how good they are. This is key to becoming a consistent, profitable trader, is to have a defined playbook. Well, how do you build a playbook? How do you know even what those ideas are? It begins with unpacking what is the driving input, meaning when you're looking at your charts, right? Because we're not on floors anymore. We're looking at our charts. What is the driving idea that I'm looking at that's helping me make a decision? And what is that? It could be, it could be a moving average crossover. It could be an oscillator. It could be a deviation of a VWAP band. It could be a tag of VWAP. What it is. For me, it's always built on some relationship of price to value, and value being defined as the most traded price within a specific time frame. So, if that's the case, I can then enumerate other conditions around that, but that's the driving input. Anything else is just supportive of that. When traders are saying, I'm trying to work on my stats or get better, how do you do that? Well, you get better by first saying, what's the driving input? So if there's trades that you're taking, go back and look at your trades and say, what was the specific thing that said I should get in? And I don't know what that is for you. There are so many that are out there. It could be a candlestick formation. It could be a relative volume. It could be a footprint. It could be a order flow imbalance. For me, it's always driven by what's the target first. So that's always, for me, is what are the conditions that tell me I'm likely to go there? Right. That's the driving input for me. I don't know what it is for you, but it's going to be hard to get to consistency and to get past a lot of the challenges that you're facing without knowing that. So here's some questions to start working through and figuring out what is, your driving input. And they go like this. So one, what is the single driving input for my trade? So of all the different things that you're like sorting through in your brain to make a decision, what is the single thing? Name that. Have the trade be named after that. Okay. Next, this is important. Why do I believe that this driving input is worth my attention? I mean, I've had these in my playbook before, and I thought that there was some edge around it, and there wasn't. I just didn't understand how the market worked. I saw a pattern, and I thought, oh yeah, I'm going to do that. This is where back testing can be helpful, and forward testing can be helpful. So, but as you're looking at that, why do I believe this is worth my attention? Spell that out. And then, what are conditions that support success around that driving input? So if I've got the initial driving input that helps me define the decision, what are additional ideas to think about? Think like if you're a pilot and you're going to build a flight plan. For all of my playbook trades, there's like the driving input, and then here's condition 2 and 3 and 4 and 5 that all would roll up and say, hey, that's A+ setup. Let's rock and roll. Let's go with size. It's all there, right? It could be tempo. It could be time of day. It could be around a composite node. I mean, these are things that, is there strong order flow in the direction I want to go? There's no binary events. Like those are the things that I filter through on mine. What are they for you? Enumerate as many as you can. Because then that can help you go back and look at your trades and grade them as to, was this an A+? Was this a C? How many of those were? What additional inputs reinforce action? What are they? And then, this is very important, what inputs negate action? What are the things that would tell me I've read this wrong? This is crucial because the brain wants to be right so badly that if you see a couple different patterns that say, I'm right, guess what? You're going to just do that all day long and ultimately not be where you want to be. So look at those questions. Think through those. If you have feedback on that or are curious of whether the driving input that you're looking at is something that practice professionals are looking at, shoot us a comment, shoot us an email, let us know. We'd be happy to know. Another framework around that can be very, very helpful that we talk about each week is to be a 4-question trader. So this is another way of just asking the same questions of what is the opportunity? What is the risk? How will I know that I'm right? How will I know that I'm wrong? To order your trades and track them. If you want more information or some examples, you can check out the website for that. This week, as you're looking to build skill and interact aside from just using the 4 questions, interact with us on Twitter. Try to be fairly responsive. If you are so daring as to open the kimono and have someone take a look at what you're doing and give you some feedback on that with no commitment, just trying to help you out. Schedule an insight session. We have a number of those slots each week that you can spend just talking with me, going over your trades, and we'll give you a good view. If you're looking to do more structured development work, you can do that through our development pathway, which is a methodic, systematic way to build the foundational understanding of the auction from an institutional perspective so that you can take that to whatever end that you want to do. And always want to give a shout out to the software partners that you've seen here, both Window Trader and EdgeClear, both aligned to help support you as traders. And then lastly, for those of you who are working in the pathway, because after all, that's what this is. This is the beginning of our pathway work each week, setting kind of the stage for what we're looking at contextually so that we can execute each day. We'll see you in Slack. We'll see you in our development sessions. And thanks for submitting your progress reports, gang. And we're looking forward to a few more good weeks left in 2022. But you're going to hear me talking more and more about how do you prep for 2023. This is not the time to turn the ship in 2022. This is the time to turn the ship on your process, which we talked about last week. Process makes profit. Just work on your process so that we get into 2023. Because guess what, man? It's going to be awesome. It's going to be some great opportunities, great ways to express risk in the market. And I think in this transition from a monetary to fiscal market, which we talked about all the way back in December of last year, which I think we're just still getting started. So thanks for watching. Thanks for your comments and your feedback. Hope this has been helpful. If this has been beneficial to you, share it. And if you want to know and be notified of additional videos coming out, make sure that you subscribe to the channel. And we'll be back next week with another edition. And with that, I bid you adieu. Have a fantastic week, and we'll talk to you next week. Peace.